In today's video, we're discussing how I'm getting stronger during the recent correction. We're earning over $400,000 now in dividends per year thanks to margin, Yieldmax, Cornerstone, and Defiance funds. And we're still outperforming the indexes. We're up 17%. Even with the recent correction in the market, we're now down over 10% in the NASDAQ and over 5% from the recent highs in the S&P, but we're up 17%. The S&P's up 12, the Nasdaq's up 11, the Dow's up 5, the Russell's up 4. We were up 27% at one point, but now we're up 17 because, again, of this recent correction. But even with all of our margin, even with this 330,000 in margin, we're still outperforming. Even on the down days, because we have certain funds that are outperforming on down days like Defiance, Cornerstone, and Yieldmax hasn't really outperformed on the down days, but if you keep them at smaller amounts in your portfolio, you can outperform. So I'm going to share with you how I got stronger during this recent correction, increasing our dividends to over 400,000 per year now, and I'm going to share with you how I outperformed in the process. We're living the FIRE lifestyle here at this channel, which means financially independent, retire early. We use these dividends to pay back our margin and live free from a 9-to-5. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So the first reason we outperformed during the recent correction was because of Defiance. QQQY, okay? As you can see above, QQQY was down 1.57% on Friday, but the NASDAQ was down 2.43, if you can see where my mouse is here. So QQQY once again outperformed, and the key to QQQY is its maintenance, okay? The reason why I have so much in QQQY is because it's low maintenance and round hill funds are high maintenance. And so everyone always asks me, why don't I buy QDTE or XDTE? Because they're higher maintenance at E-Trade. So I know you can go to other brokers for lower maintenance and explore those, but they might not have the special drip for Cornerstone. Just always keep that in mind. Robinhood has great maintenance, but no special drip, again, for Cornerstone. Cornerstone, I have 400,000 of my dollars in, so it's very important, Cornerstone. And also Defiance, I have around 300,000 of my dollars in. So the reason why I have so much in Defiance, once again, is because it's fully diversified like Roundhill, but it's 30% maintenance, not 50% like Roundhill. If you need help understanding maintenance, that's in my Volume 3 e-guide. So QQQY outperformed the NASDAQ on Friday on a down day, on a miserable down day. QQQY outperformed. So did QDTE, okay? QDTE was down, a small amount as well. I don't know if this is after hours or not, but you can go double check on that. I have it in my portfolio, and I noticed it was down less than the market, so that was refreshing, and I added to QDTE, but I couldn't add too much to it because it's high maintenance, okay? 50% maintenance, okay? View margin maintenance requirement, 50% for QDTE. So as you can see here, my available withdrawal is 247,000. Even with the 10% correction in the NASDAQ, we're still at 247,000 for withdrawal. So this means we can withstand another 20% correction from here and still be fine. We still wouldn't reach a margin call. And that's the key, okay? Maintenance, having low maintenance funds is the key to this. This is how I live the FIRE lifestyle and stay free from a 9-to-5. Is I earn these dividends of over 400,000 per year. If you can't see this number, just zoom in on your screen. And then I keep high available withdrawals so that not only can I withstand corrections in the market, but I can pay all of my bills, okay? All of my bills are automated out of my E-Trade account, and I swipe my E-Trade card to go wherever I want in this world. I love to travel. I love to go out to nice places and eat good food, and all that costs money, but my dividends just pay it back at the end of the month. And it's all automated out of this brokerage account. So my dividends will pay back my margin debt in less than 1 year. And then I'll be left with all these dividend paying assets to myself that pay monthly cash flow for life that qualify as income to banks for loans. Okay, so this is how I live in a house or buy a car or even level up and get loans outside of my account to put into my account and grow my account faster. Qualifying income from dividends helps me do this. Trading gains don't give you that. I mean, in some rare situations, you can get loans off of trading, I hear, but that's, again, rare. And most people can't beat the indexes. 90% of traders lose over time, so it's not really a good way to go, in my opinion. So you have to have these dividends to qualify to banks for loans, to truly live free from a 9-to-5. And Defiance is lower maintenance than even YMAG, okay? YMAG is 50% maintenance as well, and it falls harder than the indexes. Okay, YMAG was down around 3%, all right, and the Nasdaq was down 2. I don't know if YMAG recovered towards the end of the day, but I remember at one point seeing it down 3, and yet Defiance was down less. So that's the first way that I outperformed. I had a lot of money in Defiance, which went down less than other funds. The reverse split was a complete non-event, as I told y'all. Yes, there were glitches in our account, but we knew that that was temporary. You know, everyone was saying the sky was going to fall with the reverse split with Defiance. I was always shaking my head at that because I'm wondering, why do people listen to other YouTube channels? They clearly don't know what they're talking about. You don't need to watch anyone else. All I do is watch the indexes, and as long as you buy the indexes at key support areas, which we're about to go into in 1 second, then that's all you need to focus on. Okay, that's all you have to do is buy the indexes. Defiance is the index, but I like indexes with dividends, and so we get this qualifying income to live free from a 9 to 5, because you have to have dividends once again to qualify to banks, but you want dividends and days gains. You've seen us be up 20,000 as well. So we're down 20,000 on Friday, but if you look at our percentage here, 1.82%, we beat the S&P above. The S&P was down 1.84%. So we beat all the indexes above. Well, the Dow's down 1.5, but I'm trying to stay in between the S&P and NASDAQ, and we did this even with our margin debt once again. I mean, that's pretty incredible, because you would think with all this leverage that we fall much harder than everyone else. But again, with Defiance, you outperform, and everyone was so scared of Defiance because of the erosion and the stock split, but the erosion is just an illusion, just like with Cornerstone. Okay, I have 400 grand in Cornerstone, and that was also down less than the market. Okay, most days Cornerstone was down less than the indexes. Even on Friday, it was down 1.42, so it was down less than the Dow Jones even. And Cornerstone, as I always say, is a 5-star fund. It's my favorite fund because, well, not only is it 5-star, but it moves upward, left to right on its chart. And so I get a lot of haters on Cornerstone because they say, well, why are you in this when it goes sideways to down over time? Okay, well, it's the same for Defiance. Okay, y'all think that these charts are eroding, and they're not. Just look at your total gains. I don't know why you can't just appreciate your total gains, you know, your unrealized gains. You're looking at them in your portfolio, you see a loss. I don't know why you can't go look at your dividends, add it back in, and see that you're actually outperforming the indexes with these funds. I mean, if you go look at what JEPY is doing, IWMY, look at it here. It's outperforming its index. The Defiance fund for the Russell index, okay, look, it's outperforming its index. And so I don't know why people can't just look at their total returns once again, but Cornerstone, here it is on a chart. You have to play this fund properly. See, it's not like Defiance. Cornerstone, it's also low maintenance, 30% maintenance. But as you can see on a 10-year chart, it moves sideways to down. Okay, great. But if you time it between its rights offerings, you can get 20% premiums from Cornerstone on average. You get the 20% dividend from Cornerstone, and you get the special drip. So if you buy it up here, it's dripping the dividend down here where my mouse is for free money every month. That's what most of my members buy my e-guides for. They want help playing Cornerstone, and they want the alert at Discord. Okay, when you buy my e-guides, you get free access to Discord for life, and we alert you of the Cornerstone rights offering announcement here on Discord. Okay, it's a chat room. We have over 1,000 members in it, so we're all on top of that rights offering announcement together. As I always say, I don't care if I say the same thing over and over, because that's all that I focus on, is the same strategy if it works. Okay, Cornerstone, again, 5-star fund for a reason. If you need help playing Cornerstone, that's in my volume 4 e-guide. So Cornerstone, we have 400 grand in Cornerstone, low maintenance, just like Defiance. Okay, and Cornerstone moved down less than the indexes, just like Defiance. All right, so again, just if you play this between its rights offerings or between its premium thresholds, you can make a lot of money on the premium side and on the dividend side with Cornerstone. So Cornerstone outperformed during the recent correction, so did Defiance. Also, Defiance seemed to have raised its dividend, okay? Look, it doesn't show the dividend yield here, okay, but Defiance has around a 70% yield. But I noticed that in my emails from Defiance, we saw an increase once again in its yields for QQQY, and IWMY was not as high as usual, and I think that's because IWM had a strong month. The Russell had a strong month while the market was pulling back, and so when the premiums increased for the NASDAQ as it fell, perhaps that's why they increased their dividends. So it was just an all-around win for being in Defiance. Okay, it fell less, it had the lower maintenance, and it had total diversification. Yieldmax does not have total diversification, either does FEPI. Okay, everyone loves FEPI. I don't know why. It gives you only around a 20% dividend, just like Cornerstone, but it has 50% maintenance and it doesn't give you the gains. Okay, it just goes sideways. It just goes sideways here once again, no gains, yet it falls in a down market. Okay, falls significantly there. So yes, I mean, I sold up here and then I rebought at the lows. I got lucky with FEPI. Not really. I mean, I've been wanting to sell FEPI for the longest time. I've been parking my cash here while the market was doing well, but I've noticed that it just goes sideways once again. Everyone loves it, and that's usually a red flag for me. And so I see they all love it, and I see that Cornerstone actually goes upward left to right, 20% premiums at averages per year between the rights offerings, yet FEPI goes sideways with higher maintenance. And people could say, well, we have lower maintenance over here, so we don't care. Well, they might not have the special drip for Cornerstone, and maybe they're at Fidelity where they do have the special drip for Cornerstone and the low maintenance. However, once again, it's going sideways, and it's not giving you a special drip advantage like Cornerstone. Cornerstone is dripping you at the bottom here. FEPI is not giving you a special advantage, and it's not totally diversified. It's only like 10 names, 12 names. So how's everyone in love with this fund when it's not fully diversified? It has high maintenance. It gives you about the same yield as Cornerstone. So I don't get it, but anyway, you have to weigh the opportunity cost of having higher maintenance with lower dividend yields. So this is how we outperform. Once again, we had Cornerstone, Defiance actually outperformed, Cornerstone outperformed, and Defiance once again increased its dividends during the downturn, it seems like, with the NASDAQ. And I don't think you'll see FEPI or YMAG do that because Yieldmax and FEPI sell calls. And so their dividends will fall in a down market. But Defiance dividends could actually, again, increase in a down market like I've been saying all along. So, again, this is how we're outperforming, okay? And then we bought more funds on the dip. We bought at key support areas on their charts. All right, if you go to, let's just say, QQQ, okay? We were making videos about this last week. It only had 3,500 views, and I have over 10,000 subscribers. So why didn't more people watch this video? I don't know. And I really wish I would like my video more, by the way. I'm not trying to complain. It's just that I see many other channels getting more views and more subscribers than me, and I don't think they're giving you the same value. And also, they're charging you an exorbitant amount. I think I charge a very fair value for my services, especially considering you get Discord and my phone number for free for life, okay? And I've been here for every member who needed me over the recent correction. So if you could like my video, once again, just right now, pause and like the video. Okay, I've never really asked that before because I think that begging for likes and views is petty, and I'd rather have my numbers speak for themselves. And a lot of my viewers have moved to Discord. I get that, so they don't comment on my videos anymore. They comment on Discord. So back to the numbers here, QQQ. It was on the 100-day moving average, the purple line, and it broke. So we're here in no man's land, and I have my shorts on as a result. Okay, my shorts have been doing very well. That's also how we're outperforming. My put options in the NASDAQ were up 300% alone on Friday. I wish I compounded my shorts better, but I didn't think the pullback would be so steep. But if my members who bought my options early on this month kept their options, they'd be up hundreds and hundreds of percent, over 1,000%, I'd imagine. I kept taking the profits early and then re-rolling my puts. So I made good money on the puts. I just didn't compound them like I could have if I owned them the whole time without selling, okay? So we broke the 100-day moving average here in the NASDAQ, and the 200-day moving average is not far below. So this looks encouraging for the NASDAQ QQQ, and SPY is right on the 100-day moving average, the purple line. So we even tried to hammer, it looks like, and hold there. So even if we fall lower in the NASDAQ and the S&P, and we go to the 200-day moving average in each of these indexes, we can still withstand over a 20% correction because we have high available withdrawal. The key to that is low maintenance funds like Defiance, like Cornerstone. My margin debt does not show up on a credit check to banks, and my interest is so low, I don't care to pay down my margin interest, but every bit helps. And so again, you can negotiate your rates down. If you need help doing that, just call me. Again, you have my phone number when you buy my e-guide. So also, if you like the video, please click like or subscribe. I really mean it this time, just to see how far this video can go. And I'll talk to you soon, everyone. Thanks.